year when we conduct this exercise, when we undertake this exercise, even reports can even be better and these points can be taken care of. I would request, now we have with us CA Rajan Vadhavan sir, who is a registered valuer. He is also a member of advisory committee of ICAI RVO. Sir, with this introduction, I would not like to have an introduction having 25 years of experience, because members are always listening to you. They know about what you, the kind of knowledge or experience or expertise you possess. So with this, I would request you to kindly take on. I would not like to take much of the time. Welcome to you, sir. Over to you. Thank you.
Thank you, Sarika ji, and namaskar. Good afternoon, all my friends, valuers, everyone on this thing. We'll try to keep it more interactive. I'll take you through the findings. Like Sarika ji said, we've been doing this for now 3 years in a row. The earlier, whatever findings were there, they were put up on the website of the respective RVO when they were conducting the peer review, whatever individual. However, this time IBBI also asked us to consolidate the findings of all the RVOs which had carried out the peer reviews, so and identify the key areas, where which needs to be looked at, or certain things which are not being followed or adhered. But the good thing was, across the findings across the RVOs was, there has been a considerable, only an upside in terms of compliance, in terms of the quality of the output which is coming out, how it is addressing the needs of this thing. Kindly note, when a peer review was carried out, none of the RVOs got into a debate or deliberation or evaluation of the value conclusion which has been given by any of the valuer. They did not get into any doing a comparative whether that value is right or wrong. They looked at the qualitative work which has been carried out with respect to disclosure, whether the report is adequately informative, and whether it is not going against any of the valuation standards. So it was more on those aspects. No one got into whether the discount rate which has been used or the growth rates have been correct, not correct. No one read any of that stuff or commented on those aspects. Yes, certain aspects around why only a single methodology has been used vis-a-vis the standard of 3 methodologies. If someone has used only one, why the reasons for other methodologies not being used have been stated or not. Yes, those aspects were looked at. Certain other things which were looked at is, in this case, and just to help everyone know that in this case, the reports which were given to the valuers for peer review, they were all redacted. In that sense, full confidentiality and all those aspects were taken care of by the ICAI RVO, as well as I hope other RVOs also. And the consolidated findings of all the RVOs is what is being put out in the form of a presentation which was made to IBBI folks. They were very happy with what or the changes which have happened over the landscape in some form, and that's there. With this, can we have the presentation put up, please, which was made at the RVO? This. Anyone from our ICAI RVO, can you put up the presentation, please?
Is it possible for you to put the presentation, or it will take some time for you?
Ma'am, it will take some time for me. Actually, I'm logging from another system. Presentation is not there.
Sir, you can brief. In the meantime, she will take on the presentation, sir. Sir, we are unable to hear you. I'm not able to hear you, sir. अभी now I'm हाँ आज जी आवाज नहीं आ रही है सर की. हाँ बोलिए पाज जी. जी सर की आवाज नहीं आ रही है ना. सर आपकी आवाज नहीं आ रही है. वी आर नॉट एबल टू हियर यू सर. राजन सर आपकी आवाज नहीं आ रही है. जी मैं सर को कॉल कर रही हूँ. सर आपकी आवाज नहीं आ रही है. एक बार रीजन सर दोबारा कनेक्ट कर रहे हैं सर.
Okay. Hi, good afternoon, everyone. Apologies for this. Technology always deserts you when you need it the most. And but glad we are back. I don't know where did I lose you guys. But then I was speaking about the presentation which was made to IBBI, which consolidated the views of the various peer reviews conducted by all the RVOs and in this thing. And the good thing was that the results over the last 3 years, we've been evaluating it and they've moved up considerably. The bar has gone up. So the IBBI folks in that sense were very happy. The certain protocols which were kept in mind when we were carrying out any of the peer review was confidentiality was maintained. The standard of the peers who were reviewing it was equivalent of the reports which they were reviewing, or the person who had signed up on the report. The other key things were the confidentiality in terms of redacting of the report and all that was being met. The findings were focused primarily on the data quality and
Sir, any technical issue? No. Yes, sir. Hello? हेलो राजन सर कुछ नहीं राजन सर आई एम नॉट एबल टू हियर यू जी अपने आप को म्यूट करिए प्लीज आप अपने आप को म्यूट करिए प्लीज पार्थ जी आपके यहाँ बहुत आवाज आ रही है अच्छा
I'm audible now, please.
Yes, sir.
Okay. Sorry, I don't know where did we lose each other. So. Okay. Done. Okay, no issues. Please, okay, please can you just move forward on the fourth or the fifth slide? I think.
Please move to the fourth slide.
Third slide, yeah. Yeah, move forward, please. Yeah, that's it. Thank you. Sorry once again for the technology glitch which we are facing. Just come back to the previous slide, please. So the whole intent of this was the quality or the upholding of the ethical standards, adherence to the valuation standards. Relevant laws, regulations, have they been complied by the valuers when they were issuing out the reports? That was another aspect which was looked at. Methodologies and approaches which the valuer had adopted, have they been there was no review of the work which was done with respecting. Only focus, and I'm reiterating, was kept on the methodologies have the correct methodologies been adopted? Why, if a methodology has not been adopted, has the valuer mentioned that in his report? That was what was looked at. I think we've already spoken about this. This is the third year when this sort of an exercise has been done. This time the findings have all been consolidated into this presentation, which was made to IBBI, uh, and it was very well received from that thing, and they appreciated the quality of at least the moving up on the scale, because in the first 2 years we did find some normal glitches. They've all been removed going forward, and I think let's move forward onto the next slide. Next slide, please. Next slide, please. Next slide, please. What? Hello. Can we move on to the next slide? Am I audible?
Yes, sir.
Yeah. Yeah, I think I'm audible now. So the coming on to the terms of peer review role selection. Yeah. So can we go on to the previous slide, please? Yeah, previous slide, please. Previous one, please. Yeah. So basically, like I said, the terms of reference which were given to the reviewers basically focused on giving onto the quality of the report and key aspects to be reviewed as decided by ICAI-RVO, the compliance with respect to Rule 8 of the Companies Act was kept in mind, specific rules, regulation and guidelines issued by relevant regulators, which could be ICAI, ICAI-RVO or IBBI. Do not, like I'm repeating again, we did not give an opinion on any conclusion of value. Confidentiality was maintained, and it was ensured that there was no conflict of interest. If it was there, it was disclosed in the valuation report. And this is an interesting one because this did come up for discussion over there. We said it is quite possible a valuer may have disclosed about his or her conflict of interest, if any, if not in the valuation report, in the engagement letter. So it may or may not be appropriate for us to comment that if a disclosure thereof in the valuation report is necessary or not, because the appointing authority has done the relevant due diligence when they've given the mandate out under this thing. And next slide, please. So accordingly, the peer reviews, they gave their findings, which have been consolidated. I'm repeating this again and again. Key things which were kept in mind, when we were looking at any of this thing, is the valuer giving out his name, disclosing who were the key people who were involved in the engagement. Has he relied on the work of an external this thing? Who has appointed the valuer and for what purpose? It may in this case, while it's written IRP, there were certain cases where the board may have appointed the valuer for some other this thing. Date on which the assignment was received, when it was concluded, the valuation date, approaches adopted, why, if a particular approach has not been adopted, has then been documented in the report. Key inputs which were received, again not getting into a critique of the inputs, whether they were adequate or not adequate. We did not get into that with respect to disclosure in the report. We had left that in the engagement letter. It would have got covered. So this thing, any other comments, any caveats, any disclaimers outside the ambit of, say, the IBBI issued guidelines, if they've been given by a valuer, we also just glance through them to see are there any inherent inconsistencies with what has been recommended with respect to the guidelines on caveats, limitation, and disclosures. So those were the key things which were looked at when the valuation report was being looked at. Then it was obviously, next slide, please. Sorry, the previous slide, please. The key thing then we focused upon is is there adequate information on the asset which is being valued? The purpose of valuation, appointing authority, like I said, identity of the valuers, experts, any conflict of interest, had that been a date of appointment. All these aspects were looked at when a peer review was being carried out by the RVOs for any of their members. Next slide, please. Next slide. So, so the key aspects which were considered, okay, over here, is this, which was sufficient to communicate. Eventually, like I said, whatever report was coming out, it was evaluated from the perspective of, is it giving out the relevant information to the intended users of that report? Is there the communication adequate? Can a user of that report take an informed decision on the basis of that report, while he may like to carry out his own due diligence on the report, but can he take an informed decision on the basis of the report? So that was the focus of the peer review. Next slide, please. So like I said, to maintain confidentiality, both sides, valuer identity was redacted when the report was given up. Peer review were considered to be of equivalent stature or experience in the relevant field of valuation vis-a-vis the valuer's report, whom they may be reviewing. The key thing, which obviously, like I've been saying, it was kept in mind that the reviewer will not have access either to the engagement letter or the relevant working papers, or even the representation letters which a valuer may have used. In this case, the review does not go down this thing. It was kept, ensure that the reviewer doesn't have any biases in this thing, and he is giving an independent view or opinion on the quality of work which has been carried out. So, like I said, reviewer was commenting on the valuation report, objective, subjective, those aspects, and not getting into this thing. Yeah, please go ahead. Next slide. So, what were the major findings which came out of this thing? And I think that is a learning for all of us when we continue to write more reports or do more valuations. Yes, the biggest takeaway was, yes, the members were, or the valuers were while they were disclosing the purpose of valuation and the appointing authority, mention of the relevant section or the relevant portion of the act. In some cases, we could not see, and that was a drawback. So people could have listed out better that under which section the work is being carried out. As chartered accountants, why evaluation is required. To some extent, yes, disclosure on that ground were less or could be improved. Background information about the asset was very well laid out. I think although there is obviously a scope of improvement, but it was being spelled out. The issue which was noticed was, while the valuer's identity was being disclosed, in some cases it was not. The second or a third critical member of his team, whose identity should have also been disclosed, or other experts on whom the valuer has relied, those identity was not disclosed in all the cases. So that was something, an area which we did come out. The scope of the engagement, in certain cases, with a relevance or a reference to the valuation standard IV, was not mentioned. That was something which just came out. Now, like I've said earlier, this is a compilation of the total findings. So in certain cases, you might see IVS, whereas when we were doing it for the ICI RVO, we focused on the ICI issued out valuation standards, primarily the compliance thereof has been there. The date of appointment, valuation date, and inspection date, and the date of report, date of engagement, inspection, it does not appear in, or there was some inconsistency in some cases. luckily, I think if I go by my recollection, it was good for ICIR view, but in certain cases and certain other assets, there were some challenges. But like this is an assimilation, I would say there were, uh, I think, upward of a significant majority of the reports were good in that sense, if I recollect. Uh, uh, in certain cases, the nature and source of information which was relied upon was not disclosed. So when you are going to do a valuation going forward, I think my takeaway on this of all the finding is whatever is not there or this is something which should be inherent to any report which gets issued out going forward for all our members, and one should view it from that perspective rather than looking at it ki what was not found or there was any fault finding. It is only that one should look at in his or her report, he is capturing all those things. And this is quite adequately also spelled out in what are the essential things which a good valuation report should cover or cater to. Uh, the key thing was on the valuation approaches, and what we noticed was in certain cases, we had the situation where a valuer was still continuing to draw a reference that he's only done this methodology and he's not using the other methodologies. He might be referring that he's only used an income approach and not done a market or a underlying asset kind of an approach. Now, what he should be doing is he should be saying that these are the approaches which are there. However, out of this, I have applied this. The reason for not applying the other two approaches is what he should be articulating in the report. And that is where we found a bit of a area of improvement. I would say not an area of concern, but I think that's an area where one could improve upon going forward, especially that more and more the samples will get picked up, more and more reports could be coming up for scrutiny and or litigation, and hence it is important that a person focuses on as a good practice that he outlines what methodology he has adopted, what approaches he has used, and why a particular approach has been dropped in his view. The other good thing again was in a significant majority of the cases, we found that people were disclosing the use, distribution, and publication of the report. In certain cases, it was not there, but I think it's a very important thing. Dear valuers, I would urge you, please put out the reason or a caveat around the usage of the report to avoid any misuse thereof by anyone. It will only come in handy for you going forward. Please, you are obviously allowed or permitted. You can give out your report to another third person later on by taking a hold harmless or a release letter. But it is important that you put in your key report or the main report, you put out restrictions on the usage, distribution, and publication of that report. That what is, because the possibility of evaluation being a very sensitive topic, there is a high probability of the report getting used for some other purpose or not for the purpose for which it was intended. I've had cases where people have done valuation only for income tax purposes, and then those reports were used for even a fundraise or something of that sort. And that was not the purpose for which the work was done. And then people were getting called up by the authorities checking, no, someone lent money basis relying on that report. So hence, it is important that all those things are taken care of. Who can place reliance on your report is adequately mentioned. Again, a very important thing over here is what over the sources of information, what procedures you performed while coming onto your valuation, that is outlined adequately in your report. In certain cases, it was not there, but however, like I said, this is we did not focus on the valuation or the value conclusion or any of that thing which it has which is there in the report. We focused on has the person, what is the work which the person has done, what is the process which he has adopted, is it good, is it adequate from that perspective, has he adequately captured that in his report, because to ensure that nothing comes back to haunt him going forward or later. And hence that's why I said it is very important in the report, for a good quality report, to clearly lay out what work a valuer has done. So in some of the areas where we did find issues were where an impairment of an investment has happened, the valuer had not disclosed that, or what is the reason for that. Analysis of past financials, some guy had not done anything, or the report did not provide data on why a particular he's ignored the past, if he has, and or how a linkage is there between past to future, whatever is there. Again, keeping in mind the report which we would have got is from for a particular purpose. So we did keep all those aspects into consideration when any of this peer review was being done. In like I said, in a couple of cases, we noticed where a person had written that he's only done NAV, cost as per book, and why he's not doing a market multiples or a DCF, he did not mention it all. Now that's, in my view, that could come back to haunt him if that report were to get into any litigation. He should adequately or rationally justify why he's done what he has done, and why he's done it the way he is talking about. Yeah, next slide, please. Common finding in the valuation report, like we continue, utilization of ICI valuation standards was not specifically mentioned in some of our reports, which were issued out by the members of our RVO. I think it is mandatory for us to mention that in the report because we are required to follow them. Utilization versus, like, if a valuation has been carried out under a FEMA or an Income Tax Act for a particular purpose, because we know some of these valuations are rule based under the tax purposes, it was not clearly articulated in the report, and there was a bit of room for ambiguity. So some of those things were uh, not clearly coming out. In a couple of cases, we couldn't find the purpose of the report. Fees received, we don't get into it on whether the mentioning into the report, because we did give a benefit that obviously that would have got captured somewhere in the EL. Now, again, this issue has been raised out to the IBBI that why a person should disclose the fee which he has received in the report, because the appointment has been done by a relevant authority and it's a commercial arrangement which people would have done with the appointing authority. Next slide, please. Like I said, peer review, clear and accurate description of intended user, though majority of the cases this was given. Now expectation on more precision, I think as we move forward, we have been improving and will continue to be on that journey. So there's no two doubts around that piece. Limitation conditions impacting valuation, we did find in certain cases the RVO during the course of that the limitations were not adequately captured, or the limiting condition that there were certain situations where the appointment was done, say on 1st of June, and the report was issued out immediately after 2 days, and the nature of the engagement could be of a different kind, and possibility of work, whether you got adequate time to discuss it with the management or not, that was not, none of that was being mentioned out in the report. So that is something there. Base of value in certain reports was not explicit. That's an area which can be taken care of. And there were certain areas around what are the key factors which are influencing evaluation. Majority of the cases, people did talk about what are the things they've considered. But in certain cases, uh, what are significant reasons which could alter the valuation or which could impact the valuation were not disclosed. Uh, and, and we just looked at it purely from the light of that we were looking at the reports which were issued out during the COVID era, right? And and that did put up a lot of uncertainty on any of the projections or anything of that sort. So one did take a look at it from the point of view of if any uncertainty around any of the happenings in the global supply chain or COVID, any of those aspects could have had an impact. Has someone disclosed that? I understand the guideline around that may or may not have been there, but I was just looking at it. If when I was doing a couple of my reviews, I just looked at it from that angle. Has someone mentioned that? Because your projection, your analysis could get impacted by any of those things. The lockdown can take care of the cash flows. Has anyone mentioned all of those things? These are certain good aspects which you need to you may have to think on your feet as you're doing evaluation, because all of those guidelines which have been prepared, they may or may not capture all of that stuff. So hence it is in good order if one does look at a few of those things or goes beyond the guidelines which have been issued if he thinks that that they could be a key limitation consideration. I gave you example of COVID, lockdown, you know, a flash flood could be something, you know, that those are certain things which should be there. Abbreviated summary of the conclusion was there in most of the reports. Variation from this. This is again a very important thing. If someone had taken a different view than what is prescribed in the standard, that was not being mentioned in certain reports. Like I said, relevant ICI standard versus standards referred was not explicitly stated in the reports. Commentary on material certainty, that is valuation report not properly disclosed. So some of those things were there, and I urge you to look at it not as and for the sake of repetition, I'm saying that all the findings are available. They're there on the website. They'll be put up. Don't look at it from what faults were there. Look at it to ensure that these things, some of these shortcomings can be taken care of. The reports which are coming out in the current year, since we are at the beginning of the year. Next slide, please. The like I said, so the assumptions underlying the projections, we did not know. None of the RVOs got into the review of this thing, and this thing we did not get into any of those calculations, the mathematical calculation why a particular discount rate has been used or why a growth has not been factored or what has been the terminal this thing. They were not reviewed by any of the peers. But like I said, any good report which you issue out going forward for any of your as a good or a best practice, you should analyze the historical, look at the projections which are being given, perform an analysis on that, and then provide a statement to that effect on this thing. There were certain assumptions which were being used, but they were not adequately mentioned in the report. And that was, I think, a very important thing, which requires one to, the logic behind an assumption was not clearly coming out of the report, as I would say. It was noticed. There were limiting conditions that directly affect the valuation, do not provide the affirmative confirmation. In some isolated reports, it was found they were not there. Disclosure of value as interest or conflict, not explicitly stated in the isolated report. Some people did give out, but like I would not, personally, in my view, I would say on that one, while the guidelines do talk about disclosure in the report, but that's something that interest, I'm saying, he as a valuer, as whenever you get an appointment, at least should get disclosed in your engagement letter, because that is very important to avoid any potential harm at a next stage where no disclosure of interest was made. If you are doing it at the time of appointment or in the engagement letter, and then ensure that thereafter till you issue out the report, there is no conflict situation which is coming up. That will be a good this thing, and that would take care of your findings if this thing. Next slide, please. Again, major factors taken into consideration was mentioned, but not could be more elaborate. Again, it's a view. I think depending on the kind of engagement which you're doing and what it is, call can be taken by a valuer over there. Compliance sufficient to expectation, again, is how detailed you can go in. Again, to the user, again, it's a very sensitive topic in certain ways. People will always seek more information. Where you draw a balance, it's individual valuer's judgment. You can look at more information, and but without compromising on confidentiality, putting your client at risk, and all those things. So it's a delicate balance, which I think people do need to take into account when they giving out what conclusion they've reached on what assumptions. That's a I think analysis of historical information in certain cases was not done. I found that, or we found that a bit. There was a bit of a disconnect in certain cases where a person puts up the projection in the report, but he's not giving any data on the historicals. So there's no commentary on why a particular this thing is happening, or there is no linkage in the story from where the company was, where it is now, and where it is intending to go. Without providing any historical data, and you're talking about predictions, future, the story doesn't link up in some way. And valuations, when you write a report, the report should be in the form of a story, because you're trying to convince or tell someone why a particular thing is expected to happen, why you should rely, or why a particular call has been taken. So I think it's important to give the historical while you're giving the future also. Next slide, please. So then these were, like I said, the earlier these things were related to our RVOs, which were common, but then certain other the respective RVOs had also carried out their individual this thing, and any extra observations over and above or beyond what was noticed earlier was highlighted by the respective RVO in the presentation. So certain like CVS RTA found relevant asset standards were not referred or should have been mentioned separately. Extent of investigation, extent of procedures which have been performed. In one case, RVO Estate found that as a drawback. Divya Jyoti found something else. These were respective issues which or extra observations beyond the common observations which were observed in most of the cases, all of the cases. These are more related to the members of each this thing. Extra observations, estimate value was. Next slide, please, if we just go forward. So someone had mentioned 30 days, 5 years, and all that stuff. Someone had not mentioned about the validity is not valid or not required. It was not mentioned out in the report. Valuer has no modify for events subsequent to the date of this report. So this is an abundant and excess caution. No one stops you from putting any of those things. Next slide, please. So again, certain things which were found by IIV, RVO, IOV again found something missing. These are specific or extra observations beyond what is the minimum required or the general stuff which I spoke about earlier, because that was in the context of what IBB had also put out as a good valuation report, what it should contain. So that generic benchmarking was done against that, and these were like the specific cases which were observed, and this thing done, and a lot of them related to plant and machinery or the fixed assets part of it, and where the data insufficiency was not pointed out. Uh, COVID impact, this was again a very relevant one, and I did speak about the impact of COVID on the valuation was not mentioned out in a number of reports, and especially during last year, it was a pandemic year. So we did feel some people could have done, especially in the case of liquidation valuation. This issue did come up. A lot of people could not even go and do physical verification, and due to the lockdowns and all that, how that has got covered in the report is something which was looked at. And while some cases it was fine, in certain cases people forgot to mention that they could or could not do some of those things. So it is good to do. These are, I would say, when someone looks at this presentation, you should look at it in a positive manner of what good things should be there in his report, or what his report should allude to or capture, rather than seeing that 5% of the total sample which got reviewed did not have this, and hence 95% or 85% were compliant on this thing. One should look at only that these shortcomings are not there in the reports going forward. So CEV, IAF, RVO, again, they found certain things around the plant and machinery, improper report heading, detail of investigation conducted were not provided, technical specifications were not mentioned. While a lot of these may or may not be relevant for us, but as users of the report, and especially when we are doing evaluation and we are relying on a report which has been given by another expert to us, I think it is important that we ensure or we see that these aspects are covered in that report, so that eventually we are the ones who could be signing off on that report, and while we are relying on the report or views of another expert. Certain other thing going forward. Next slide, please. So, like the ICSI RVO found that valuation bases are not mentioned, premise of valuation was not mentioned, CAPM workings are not there, inconsistency in approach versus valuation date. Someone had got the valuation date as June, but he was using the valuation from the projections from 1st of January, and the valuation date was prospective without making any adjustments. Like I said, again, no focus, no idea, no critique or no comments were done on the conclusion of value which a value has done. However, on the overall basis, it was looked at on what all things have been looked at by a valuers. So just go back into the previous slide, please. Previous slide. So like I said, on this one, financials were on June. For cost income, 1st April. So there's an inconsistency in the two dates of valuation itself. So it was noticed over there. Next slide, please. So experience based on observation, what did we saw? What was being disclosed? Well, we found GIGO, garbage in, garbage out, whatever projections are given. If someone has accepted them blindly, has any work been done on that projections? Yes, in some of those things we did see there was a mention to that effect. People were taking care of these things. Management projections, people were writing things around key assumptions, review, what analysis has been done. The storytelling, I'm saying, in evaluation, I think, and you would have heard Professor Damodaran also talking about storytelling in any valuation which you carry out is very important aspect. The flow from the historical to the future, and future is always great or good. Why it should happen, I think that's something which Yuan should take care of in his report, that or ensure that his report is spelling out the story very well, to avoid any this thing reliance on the work of another expert, rationale approach, methodology, why a particular growth rate is being considered, discount rate is being considered, comparable weights, conclusions. We all agree in that sense that valuation is a art and a science. Science in terms of the methodologies are well laid out. There are only three methodologies: income approach, market approach, cost-based approach. However, the art lies in applying those methodologies, and that's a matter of subjectivity. While people may be trying to take out that subjectivity or minimize the subjectivity, or take the emotional quotient out of any valuation which you're doing, make it purely a quant based, but then, yes, somewhere still the subjectivity angle or the human this thing will come into play, or decision making machines will not still be able to think out the human brain in some form. But yes, your conclusion analysis should not be controlled or anchored or biased in some form by your emotions only rather than rationality. Next slide, please. So what were the recommendations which came out of all of this? I'm cognizant of time, so I'll try to finish off in 10-15 minutes thereafter, and we can have a good Q&A thereafter. I think interactive thing is more meaningful. Common recommendation which came out was explicit declaration regarding compliance with the valuation standards, with the relevant valuation standards should be there in the report, and that was not mentioned in the valuation report. People were giving out a generic statement. It will be in good order going forward if the relevant valuation standard which has been used is brought out or mentioned. While defining the purpose of the valuation appointing authority, incorrect mention of legislation, I mentioned this earlier also, was done, and I think people need to be a bit careful around that this doesn't happen, and it should be taken care of. Valuers' interest or conflict, it was not explicitly stated in certain reports, and ideally should be clearly reported. Affirmative statement in this regard could result in giving a greater credence or credibility. While I totally agree that on one side, this aspect perhaps would have got covered in some form or the other by the appointing authority before taking a decision to appoint a valuer, but a statement around that will always be helpful. I think this was a very important aspect which came up, that some people didn't seem to be using the caveat or limitation which is there in the guidelines also adequately. They should state out, this valuation is being carried out on a particular date, and it, depending on the date of valuation, the value number of the conclusion can change. Certain people had not mentioned that this kind of a caveat, and I think it's important for you to just mention that the valuation date, this valuation has been carried out on this, using this as a particular valuation date, basis the facts and information which was there at that point of time, obviously taking into account any significant events which may have happened thereafter. Next slide, please. Again, this is adequately mentioned out also in the IBBI or other papers, where they are saying that an affirmative statement is required from a valuer, that he has looked at them, he has reviewed those assumptions which have gone into the development of these financial projections, whether in terms of inquiries he has made, he's reviewed them, he's analyzed them and taken any decisions around that. So I think it's important that your report captures that statement in some form or the other. Key factors, again, um, should be mentioned in the report, which can have a material impact on the valuation, which could be, yes, in certain cases, we did not find people mentioning whether they were valuing a equity share or they were valuing assets, or they were valuing business, whether they were carrying out an enterprise value or an equity value. So those things can be very clearly mentioned out. Similarly, things around whether if the valuation is being carried out for majority versus minority, liquidity, illiquidity, any adjustment has been made, diminution or augmentation of the controlling interest, marketability, illiquidity, any of those aspects have been brought out or they've been considered. I think those are certain very important things which a valuer in his report should capture, and I think it is important, hence, that as a good practice going forward, those are there, and hence that has also been recommended by the RVOs. In certain report, the valuation date, like I said, was inconsistent or not disclosed at all. Date of appointment value need to be clearly brought out in the report, because then informed or a user of that report can appreciate when were you appointed, what date this valuation was being done, and the aspects around the circumstances which have been considered, or the key assumptions, how they were relevant or considered when your valuation was being considered. Next slide, please. I talked about it earlier. Identity of the valuer or any other expert involved in the valuation should be explicitly stated. This is and this is again something which we noticed. There were certain cases where there were ambiguity whether the engagement has been executed by the CA firm or the valuer in his or her individual capacity. And I think this is especially relevant for all the members who are in practice and are also registered valuers. People were using the chartered accountant firm letterhead instead of his individual this thing as a valuer, and I think those are certain things which one does need to take care of while issuing out any of his reports. Base value of the report should be ideally explicitly this thing. Valuation, what standards have been used was not mentioned out in the report. I've spoken about it. While people did put out a statement, a blanket statement, we've used ICI, issued valuation standard. Which valuation standard was not mentioned at it, and there is scope for clearly outlining that or expressing that in your report. Sufficient, historical report data has been used or not used should be presented or provided. I've spoken about this earlier. This is again very important thing in certain cases. I think I've spoken a lot about it earlier. So these findings were also given out as a recommendation to IBBI and are being recommended to all the fellow members of each RVO. Each RVO is going to its members with these findings and asking them to inculcate them or incorporate them in any analysis, any reports which you are going to be issuing out later. So sources of information which were relied upon should be mentioned in the report. Whether any analysis review was done on that information to verify its authenticity, has that been brought out in the report? That's another area which should have been taken. It was observed a number of valuers were still not using the guidelines on caveats, limitation, and disclaimers, which has been issued by IBBI, and why any deviation beyond those CLDs have been adopted by the valuer for carrying out his or her work have been brought out or no. The generated reports must be with the relevant caveats, limitation or disclaimers as has been brought out by the IBBI. Limiting condition did not give affirmative confirmation, so this has been brought out. You should key valuation assumption should be justified. This again, I've spoken about it. The storytelling is very important. Where the company was, where it is going, and where do we see, uh, uh, and then taken care of over there. Uh, next slide, please. So again, common recommendation. These are all their executive summary to understand the valuation report. Shall be provided. It shall include the methodology in certain cases. In the case of detailed report, so the summary section should basically say, like, if XYZ methodology, what number has been reached adopting a particular methodology, and then what weights have been assigned to each approach or something like that. It can be done on that basis. How the data has been processed and all that stuff for this thing. There was a particular case which was observed by where the CRP announcement date was January, evaluation date was given as the same, inspection date in September 19. So it became quite a murky kind of a situation in that case. So people need to be a bit careful on those things. Next slide, please. So these were again individual recommendations which were given out by each RVO in some form on the after the review of the report. ICA RVO, where we are all the members, we give this thing where the investments were considered at lower value, whether any impairment has been done, not done, or has been considered in the analysis. It was not clearly coming out. Past financials were not presented out. I've said this earlier. Value was, or the other was around the working capital. A significant portion of value was coming from working capital, and it was a liquidation valuation. Whether any procedures have been performed around that valuation, around that component of value, it was not clearly coming out in the report. So these were certain this thing that we said that an analysis of the historical should get included in the report, and why particular changes are being recommended or why certain things are going to change should be clearly articulated. Next slide, please. A rationale for using an NAV and not market multiples or something, it was not mentioned. ICARVO rationale for using a higher terminal growth rate of 8% when the discount rate used by someone was around 9.85. So it was not explained out. Like I said, no one went into the calculation or conclusion, but these were the top level things which someone checked out upon. That what is happening, because in the instant case, roughly 50 times the last year's projection would have come in as a terminal value, and or the multiple for the terminal, this thing would have been 1.85, 100 divided by 1.85, which is roughly around 50 or 55 times the last year's earnings. So what was the reason for that? No one had mentioned that in the report. Next slide, please. Again, ambiguity on liquidation valuations. Some of these findings, a lot of these relate to assets, and if you are performing any analysis of value for a liquidation purpose under the aegis of the IBBI, I think it is important for you to, when you're even reviewing the report, which may have been given by another expert, that you ensure that all these things are taken care of, because eventually you could be providing a view or opinion on the final conclusion of value, and hence it is important that you are covered in all aspects. Next slide, please. Next one. We covered that. Divya Jyoti, they found certain, again, individual recommendations and all that. Say growth rate of 1% was used for perpetuity with this thing. Company specific risk premium, which was used, was at a different tangent with the other. Someone had you, obviously, the next slide, please. There are comments around the RF, RM, and all that stuff. But we did not get into, again, the conclusion of value, repeating it again and again. Just look at it from a point of view. I would look at it, this whole analysis, to help you what you should articulate out in the report going forward. Next slide, please. Next slide, and this one, please. Next slide, please. Yeah. So these were some of those things which people found as delinquencies, and then they put it out as respective information for their members. Wholly owned subsidiary valuation report doesn't mention the well, for a wholly owned subsidiary, I don't know why should it mention the layers of shareholding. If it's a wholly owned, it means 100%. That's what I'm presuming. But people found that limitation and disclaimers could be more descriptive and in compliance with IBBI guidelines. People did not find that. Next slide. With this, I am coming to an end of what were the summary of findings and this thing. Keeping in mind, I thought we can have more questions around what or how a report should be structured, or any of these things should be taken care of. So I'll leave the next 20 minutes. I'll keep the house open. We can have interactive session rather than a monologue coming from me. Please, if we can open up the floor, I'm happy to take questions for the next 15-20 minutes, please. Sorry, audio is not clear. Someone asking any questions?
Yes, sir. Sir, not many questions, but the members, one thing is share some do's and don'ts for the registered valuers while undertaking their professional duties.
So I would say it is, the don'ts are all there for you to see what the peer findings are that you should. The do's, I would say, is disclosure of interest, the appointing authority, the date of report, independence, the quality of the report. I lay a lot of emphasis on the quality of the report, the storytelling in the report. I think those are certain most important things which a valuer should consider, that he's adequately able to justify the decisions which he has taken. Obviously, your decision or my decision could be different. You could apply a 10% in your judgment, a discount. I could apply a 5%. That is all fine. But why a 5 or why a 10? That should be spelled out. That keeping these factors into consideration, I've applied a discount of this much. Someone may, on those factors, may apply a discount which could be 5%. That is all fine. But that's an individual's view. So those are certain things which should be taken care of. I think don'ts, I would say, is don't try to write that management told me and hence I did this. Why only one methodology and not the others? Not disclosure thereof. The why a particular decision which can come up for discussion or deliberation, why that has not been explained.
I think there is some.
Yeah.
Yes, sir.
Next question, please.
What are the significant differences seen in valuation reports between last year and this year's review of valuation reports?
Yeah, so the significant changes while they're all there in the website. I would suggest that the key thing which we noticed was the purpose of the valuation was clearly laid out that was a significant improvement. The appointing authority in previous times, they were not mentioned. Yes, I did see still some discrepancies around the date, which is a confusion between appointing date, valuation date, the date of the report. Those things continued. Improvement in the disclosure quality around the disclaimers, caveats, and limitations vis-a-vis earlier years. The assumptions, while the quality of the key assumptions or what work has been carried out improved. There, I thought there was scope of this thing. Improvement, reliance on the work of another expert. The bar moved up, but not clearly. People were not giving affirmative statements earlier around the work which they have performed on the projections or anything of that sort. I did see some people now started giving those statements, mention of valuation standards issued by whether it was ICI or IBS. Yes, it had improved a lot. Conflict of interest or disclosure of any of those things was not done earlier also, and still not done. In a majority of the report, a lot of people were still not doing it. But like I said, that was there. Closure was not there. We did see still a number of cases where, while he's issuing the report as a RV, still using the letterhead of the CFO. We did see them, but the numbers come down. Like I said, bar on all these parameters, if someone wants to spell out, it is moving up for sure.
Yes, sir.
Next question.
Sir, actually, one more question again is key matters to be taken care by the registered valuers before accepting the assignment. Before you take this question, I would request the registered valuers. ICAI RVO has brought out many publications jointly with the Valuation Standards Board of ICAI. And Valuation Standards Board has also brought out many publications, including a answer to question 80Q on this particular topic, learnings from the observation of peer review valuation reports, which are available on ICAI website. Kindly refer those. Also, we conducted one VCM on do's and don'ts for registered valuers. Secondly, handbook on best practices for registered valuers. I request all the valuers who are watching this webcast, who are there present, please refer those books. The questions what you have asked have already. So my humble request is if you can go through those books, those will definitely help you in taking out your assignments, how to proceed further. And one thing which you have to take care before appointment is that in case of IBC, you should have been appointed by the IP only. Please do not accept assignment from a third party which is not mentioned in the law. Take your appointment letter from the insolvency professional in case of IBC, or in case of a company from this audit committee or board or the authority which is there under section 247 of the Companies Act. Rajan sir, next question you may take. Can valuer restrict the distribution of valuation report? Has some network issue. Distribution of valuation report can be restricted based on the law. The law prescribes when a regulator asks for, you cannot deny. So it is based on who is authorized under the law to seek valuation report. Rajan sir, are you there? As regards invoicing, you are a valuer in the capacity as a registered valuer. So invoicing has to be done in the individual name. The money should come to you, not as a partner of a CA firm, not in the name of the firm, because you have not registered yourself as registered valuer entity. You have registered yourself as a registered valuer. So invoicing should be under your name, not in the name of the firm. Rajan sir, you are there? I'm not able to hear you, sir. I think there is again a connectivity problem, and most of the questions have been taken up, and also they are referred in our publications, which we have already brought out. And one more question, if I'm if CA surrenders the CA COP, but as RV COP, how to comply with DUDIN? This you need to check from the institute, because a practicing chartered accountant can only apply for UDIN. As from ICARVO, there is no requirement for applying for UDIN. So there is no concrete answer for this. You can write to ICAI, the concerned committee, and you may please write to them for correct answer.
Sarika, I'm back in case you.
Yes, sir.
So I think there was a question around restriction on the usage of the report, right?
Distribution of report.
Distribution of report. So let's look at it in a different way. Yes, you can never stop a regulator from looking at your report, or if your report is called upon by a regulator, you cannot, irrespective of whatever you may have put in the contract, you cannot do that. However, when you are entering into a contract or you're taking on the appointment from the appointing authority, now whether it's a RP or it's a board of directors, like I'm not distinguishing the valuation being done under IBBI. I'm saying you could be doing a valuation under the Companies Act or any of those purposes also. That's a contract which you enter with the appointing authority. So you can restrict, or you can say over there that my work is for you to take an informed decision, and it is not for, and this helps you obviate or avoid any third party liabilities. You don't know what your report may or whose hands it may come. So you can put that condition there. Secondly, you can protect yourself by saying, yes, fine, it is up to me to permit you to share the report, or you can make your report, like you can have permitted recipient of the report also defined. You can also have a fine that I can allow this report to be shared with a third party, provided he gives me a hold harmless or a release letter that he's not going to come after me. So there are various constructs around which you can work around all these things. Yes, but you can, when you're taking on an engagement, put those caveats in place. I will give you a classical example. You can very well have a situation that you may do a valuation for someone internal benchmarking. Tomorrow he gets into a litigation with someone else, and he submits your report in as one of the papers in the filings. Now tomorrow, if you've not restricted him from and this valuation was never meant for as to be brought out as a for the purposes of litigation, you could unnecessarily be called for all the hearing, come and defend their report and all that. However, if you clearly articulated at the beginning when you're taking on the engagement that my valuation is for this purpose and it is for this purpose, and it is is not to be used for any other purpose. You put a restriction around it for a minute, and I'm being very clear over here. Regulators, restriction on a report being sought by a regulator, investigation agency, you cannot put a condition around that. However, you can put restrictions about any third party getting access to your reports, which has not been clearly identified when you took on the engagement. That you can do. Next question, please.
Yes, sir. This is the last question for today. What can be the maximum time gap between the date of conducting valuation and date of valuation report?
I think this is a question which again depends on the nature of engagement, right? A person cannot define that when does he get appointed and when does he finish off the work. It is taking into account the nature of the engagement which is there, what work you are supposed to do, and is there adequate cap, or is there been adequate due diligence or diligence exercised by you in completing the work before submitting a report. I think it's very case specific. You could get called tomorrow that how could you do this work in 2 days. In international cases, it has happened. People have said this work couldn't have been performed in 2 days. So it gets into a debate. Yes, you can mention also in your report that I have done this valuation on a desktop basis. I did not have access to the following information, and this valuation has been done subject to that limitation. That is something which you can do. You can mention I could not hold discussions or deliberations with the management. I could not do this and that. That you can mention, but it has to be reasoned why you're not able to do it. If someone tells you to perform valuation of a large listed entity in 2 days, yes, under the SEBI formula, perhaps you can do that. You can do it on a comparable basis, but whether you were able to perform income approach, did you get access to the information? Did you get access? Suppose it was a litigation, did you get access to the other litigating party or for their views? That is again, it's a time taken to complete an engagement. I think depends on the nature of the engagement, how much time it would take a reasonable person to perform a job. I think it cannot be prescribed that 2 days, 3 days, 5 days is good enough. Depending on the size of the company, there have been cases under IBC itself that a multi location or a multi-plant company, whether you had adequate people who could cover all those locations in over 10 days, 5 days, or 45 days for you to do a work. That's engagement specific requirement, but you cannot prescribe a date or the gap, I think. Any other question, please?
Sir, today we have only these many questions. There are some questions on disclaimer limitations. So kindly refer again the publications which we have brought out so that you get better clarity on the questions raised. And I think we are through, sir, with the questions and everything.
Good. I think we had kind of budgeted that we can do it in 1.5 hours.
Exactly. And just one more thing, one member has asked how many CP hours. Actually, as per IBBI guidelines, CP hours can be granted only with the participation of 100 participants. We cannot grant CP hours for open webcast. So there will not be any CP hours for this webcast, sorry. And you can claim CP hours in ICI as unstructured hours. Let's see how we can do it. So we can conclude, Rajan sir, with this.
Yeah, sure. And I think as things continue to change, you may have a few, with those 50 hours, you can put this out and you may have it in physical mode also once in a while rather than all being in this manner. And we
Exactly, sir.
facing challenges around technology still.
Yeah. So thank you very much, sir, for taking this session extensively. Again, for the sake of repetition, already some answer to questions are available on website. The findings of valuation reports is also available on ICAI RVO website. Kindly go through what kind of findings were there in the valuation reports. For the past 3 years, there are 3 documents which have been uploaded. So I would request the members to go through it. And next VCM we have on disclaimers, limitations and caveats guidelines on 17th of June. I would request all of you to kindly again join. So on behalf of ICAI RVO, I would like to thank once again Rajan sir for taking this session, and the participants who are part of this webcast, and ICAI RVO team for being making it successful. Thank you everyone. Thank you so much.
Namaskar.
Namaskar.
Have a nice
Thank
day.
you.